All right, guys, welcome back to cryptojiri. Today we're going to be talking about why the Bitcoin price rejected at $10,000, as well as some good news on the Bitcoin halving, CoinDesk, as well as a bunch of Twitter tweets. So let's take a look on the Bitcoin prices. As you guys can see, right, Bitcoin did pump up to all the way to 10,000. Let's say around 10,075, and then it got rejected to the lower 9,400. So in that case, I'd say that's a good sign, just because the way that I have my charts marked out on the hourly scale is that it did catch up on the lowest bullish trend line. Which is a good sign, right? And of course, you guys see this red line right here. This basically indicates that there is the Bitcoin halving. So if we do take a look on the Bitcoin halving, it is 2 days left and 11 hours away. My prediction on what's going to happen from now on, I'd say it's going to test here, reject a little bit, come down to at least 8,000, and then just pump. But of course, who knows? It could just keep going, and then it'll hit the Bitcoin halving. It's gonna keep pumping and pumping, but who knows, right? So the first news of the day, of course, is we're gonna go to Coinbase for the biggest news, I'd say, of today is Fed spending is good for asset prices like Bitcoin, but lousy for Main Street. A lot of they say. So if you do take a look, right, early March 2012, 3 years after the biggest financial disruption in 80 years, with 8% of the U.S. workforce unemployed, with 4 million American homes foreclosed, and with Europe tearing itself apart over fiscal austerity measures to contain a debt crisis, someone forked over 119 million for a painting. So basically what they're trying to say here is that yes, it's basically Wall Street is trying to get, and hedge funds are trying to get into Bitcoin, as well as like Ethereum, Ripple, Litecoin, and all that stuff. But entirely, a lot of the feds and people who are like very old school in the stock market do not really like Bitcoin, which is completely understandable, just because that's just how history of money is, right? If you guys take a look, when basically the history of money is people were trading, right, for like corn and apparel, or for example like livestock to land, or even other types of food. And then you go into, of course, right, silver, gold, and that's basically where the history of gold comes in. Then you go, of course, right, gold is very hard to move, so that's where they went into paper money, right, from the banks, and that's where banks were basically kind of invented. And then from there, right, paper money became into debit and credit cards. And that's where people were like, well, I don't want that because I don't know what the government's going to do, or like the banks are going to do with my money, blah, blah, blah. And of course, it happened. And now, even though Bitcoin is digital, even though Ethereum is digital and Ripple is digital, people are scared to move on to the newest form of currency. I wouldn't say it's gonna be the main currency, but I will say it's gonna be one of like the biggest currencies that's never gonna be controlled or monitored by any type of government or any type of person. So that's where they're trying to, like, there's always backlash against the newest trend, right? Which is completely fine. If we do take a look on New Zealand, there's good news, I'd say, just because central banks is hiring a money futurist. Basically what this whole article is trying to say is that they are trying to move into the digital currency side of their own currency, right? So we are seeing that, for example, in China. China's trying to make their own digital currency. They already have a beta test version out to their citizens. We already seen this in Venezuela, as well as somewhat Colombia, where they're using digital currency assets rather than their own paper money, because it's worthless, right? You're just printing money that's not backed by anything. And then the U.S. as well, right? You have Fed coin as well as the USDT, they're trying to implement as well. So we're gonna see what's gonna happen. But there are good things about this, of course. And then another great news. Nick Tron, he is a very well known news reporter for Bitcoin as well as finance, and what he has stated is that Paul Tudor Jones says it is the world's top macro investor, of course, and he says that Bitcoin reminds him of 1976 gold. Many of you might not know, but in 1971 or the 1970s to the 80s, the dollar went off of the gold, and that's where gold went up and dollar plummeted down, of course, right? And he's saying that if that's what's going to happen to gold, then what's going to happen to Bitcoin? And if Bitcoin does the same thing to 730% from the 1976 lows to the 1980 top, that would basically be moved up to $72,000 per Bitcoin, which is awesome and great news, of course. And then Raoul Pal, which is a very known Wall Street trader as well as economic trader as well as news trader, has put this out there. So basically on his first chart, right, he examines the perfect wedge. Everyone knows in the trading world what a wedge is. I'm not really going to explain that to everyone, but of course, if you use the classic trading techniques, it gives you a price target of around $40,000, right? If you guys can see the fourth, of course, after the third hits, the fourth one goes out of the wedge triangle, which means there's going to be new higher highs and higher lows. But, right, there's the word but. If you guys come down to chart 2, perfect wedge on the long chart, right, gives you a price object for its run, potentially keyword, potentially of $1 million per Bitcoin. Of course, we are going to be seeing this kind of stuff, these type of predictions, which, right, numbers are everything, but Bitcoin is not backed by anything. So yes, numbers don't lie, but at the same time, it depends on the people, depends on if people really do value Bitcoin, right? Which there is a huge following of it, and it's gaining every day from the last news of Cash App and all that stuff. A lot of people are buying now and holding. They're not selling anything. So, which is a good number to say. And then if you look at the perfect regression channel, that gives you one standard deviation move to $400,000 and a two standard potential to 1 million, right? Potentially, which is not a bad thing, but right, it's not going to move in a day or in a week. This is going to take time for it to move up to that type of number after the halving, right? I'd say at least a year or two for that to go up. But right, if people started buying it 4,000, 6,000, 8,000, 10,000, or even not right now, 9,700, and you're up, $40,000, you're still in the green, right? So of course he keeps saying whatever plays out after a key technical break like today, the probability of vastly higher prices has risen dramatically by the stock to flow models that we have talked about in the recent videos, by 100 trillion USD, and the breakout has happened almost exactly at the halving. Huge quantitative easing, fiat means the hardest money that automatically quantitatively tightens BTC wins. So what he's talking about right there is how the feds are printing money like crazy for no reason, is making Bitcoin win more and more and more just because of the halving, of course, and making it very well known. Expect horrific volatility, both up and down, of course. That's just how Bitcoin works. But you can't make 5x, 10x, 100x returns without large drawdowns, so be careful how much you put it in. So basically right there, he's saying, yes, you can make that kind of money, but at the same time, you cannot. Depends on where your positions are in the market, of course. It always feels like you have too little until it doesn't, and then you wish you didn't have so much, right? So another good news of a well-known trader as well as a well-known economics has cited Bitcoin. Hopefully today's news will give you guys a really nice day of the morning. Hope you guys have a great day and keep hauling, guys.